Hello, welcome to Rise and Prosper with Jay Lakhani. In this high-vibration lesson, I would like to talk about something that quietly destroys more trading accounts than a lack of knowledge, a lack of strategy, or even a lack of experience. It is something that almost every trader has done, and many continue to do without fully understanding the consequences. I am talking about the hidden cost of one bad trade. You see, most traders believe that if a trade only loses a small amount of money, then no real damage has been done. But what if I told you that the financial loss is often the least important part? What if the real damage is taking place deep within the subconscious mind, quietly shaping your habits, your beliefs, and ultimately your future results? In this lesson, I want to show you why one bad trade is never just one bad trade, and how the small decisions you make today can determine whether you become a consistently profitable trader or remain trapped in the same cycle year after year. One of the biggest misconceptions in trading is that a small losing trade does not matter. Many traders think it was only a tiny loss, or it only cost me a few pounds. But successful trading is not simply about protecting your account balance. It is about protecting your mindset, your discipline, and your identity as a trader. The market does not reward intelligence alone. It rewards consistency. The difference between a struggling trader and a successful trader is often not found in their strategy. It is found in the quality of decisions they make every day. As I often say, you do not become a successful trader by making money. You become a successful trader by developing successful habits. And one of the habits is to eliminate silly mistakes and avoid bad trades which does not follow the trading plan. So the real cost of the silly mistakes is the damage it causes to your subconscious mind programming. Imagine a pilot preparing for takeoff. The pilot has a checklist containing dozens of items. One day he decides to skip a small part of the checklist because he believes it probably will not matter. Nothing happens. The flight lands safely. The next day he skips another item. Again, nothing happens. Over time, he begins to believe the checklist is optional. The danger was never the first shortcut. The danger was the habit that the shortcut created. Trading is exactly the same. A trader takes a trade outside their rules. The trade loses. They tell themselves it was only a small loss. Or worse, the trade wins. Now the subconscious mind receives a dangerous message. I don't need to follow my rules. This is how accounts are eventually destroyed. Not by one big mistake, but by thousands of small acts of indiscipline. Next, I would like to talk about the programming of the mind, the supercomputer that is within us. Most traders focus on the outcome. Professional traders focus on the process. Every trade is programming your subconscious mind. When you take a high-quality setup, you strengthen discipline. When you wait patiently, you strengthen patience. When you follow your plan, you strengthen trust. When you chase a trade out of fear of missing out, you strengthen impulsiveness. When you enter early, you strengthen impatience. When you break your rules, you strengthen self-sabotage. The subconscious mind does not care whether the trade made money or lost money. It only records behavior. This is why a winning trade taken for the wrong reasons can often be more dangerous than a losing trade taken correctly. This now brings us to being very disciplined so that we are very selective in the type of trades we take. We will not force a trade. It is better to stand aside and not take a trade. Many traders suffer from FOMO, fear of missing out. They see the market moving and feel they must be involved. They believe opportunities are rare. Nothing could be further from the truth. The market opens tomorrow, and the next day, and the day after that. There will always be another opportunity. A fisherman does not throw his net into every part of the ocean. He waits for the right location, the right conditions, the right moment. A professional trader does exactly the same. Patience is not inactivity. Patience is discipline in action. So with this mindset, you will only take A+ trades. One of the greatest breakthroughs in trading occurs when a trader stops looking for more trades and starts looking for better trades. Most traders are obsessed with quantity. Professionals are obsessed with quality. Imagine a sniper and a machine gun. The machine gun fires hundreds of bullets hoping something will hit. The sniper waits. studies, observes, then takes one carefully selected shot. The sniper mentality wins in trading. The question should never be, how many trades can I take today? The question should be, how many A-plus opportunities can I identify? One high-quality trade can often outperform 10 mediocre ones. Now I would like to talk about you achieve mastery over your thought process, which is independent of what others tell you. Many traders develop beliefs that are never challenged. Someone told them never to trade Fridays. Someone told them never to trade during news. Someone told them never to trade a particular market. The problem is that these beliefs often become accepted as facts. Successful traders learn to become students of the charts. Rather than accepting opinions, they seek evidence. The market itself becomes their teacher. When reviewing charts, ask, what actually happened? Where were the opportunities? What was the market trying to do? What lessons can I learn? The trader who studies the charts objectively will always outperform the trader who follows assumptions blindly. This now nicely leads us to the importance of trading journal. A trading journal transforms your data into actionable insight, moving you from guessing to consistent profitability. Rather than just tracking wins and losses, it highlights your psychological triggers and decision-making patterns, allowing you to refine your strategy and avoid repeating costly mistakes. Many traders underestimate the importance of a trading journal. Your journal is not simply a record of profits and losses. It is a mirror. It reflects who you are becoming. It reveals recurring mistakes. It highlights strengths. It identifies weaknesses. Most importantly, it exposes patterns that are invisible during live trading. The quality of your journal often determines the quality of your growth. If you want professional results, maintain professional records. This will then enable you to focus on discipline and not the profit. When you follow the process, then the byproduct is profit. Most traders wake up thinking about money. Professional traders wake up thinking about execution. Money is a byproduct. Discipline is the cause. Think about an elite athlete. They do not focus on winning medals every minute of the day. They focus on training, diet, recovery, practice. The medals arrive as a consequence. Trading works the same way. Focus on following your plan, taking A-plus setups, managing risk, remaining patient, executing consistently. The profits will follow. Often many traders ask me, Jay, why are you always so calm and patient when trading? Although I have long retired from conducting live trading seminars, there was a time when I would stand in front of hundreds of traders and trade live with real money. Naturally, many people were curious about how I was able to remain calm under pressure whilst others became fearful, emotional, or stressed. My answer is always the same. A major reason for my mental fitness comes from the wisdom of the Bhagavad Gita. Often people view the Bhagavad Gita as a religious scripture, but I choose to differ. In my opinion, the Bhagavad Gita is far more than a religious book. It is a manual for life. It teaches us how to think, how to act, how to make decisions, how to deal with uncertainty, and how to remain balanced during both success and failure. These principles can be applied to every area of life, including relationships, health, business, and personal development. Trading is no exception. In fact, because trading constantly tests our emotions, discipline, patience, and ability to remain detached from outcomes, I believe the wisdom of the Bhagavad Gita can be one of the most powerful tools a trader can ever study. Lord Krishna teaches one of the most powerful lessons for traders. Focus on your actions, not on the outcome. You control your preparation, your discipline, your risk management, your execution. You do not control the next candle, the next news release, the next market move. The moment you become attached to the outcome, fear and greed begin to influence your decisions. The moment you focus on the process, clarity returns. Great trading is not about predicting the future. It is about responding intelligently to the present moment. And now finally, remember this. A successful trader is not built by a winning trade. A successful trader is built by thousands of disciplined decisions. Every day you are either strengthening the trader you want to become or strengthening the habits that are holding you back. The market is always watching. More importantly, your subconscious mind is always watching. Trade well. Think well. Act with discipline. Because long-term success is not created by what you do occasionally. It is created by what you do consistently. Protect your mindset. Protect your discipline. Protect your identity as a trader. The profits will take care of themselves. If you found value in this lesson, perhaps take a moment to reflect on your own trading. What was your biggest takeaway? Was there one idea that resonated with you, or perhaps a habit that you now recognize needs improvement? Feel free to share your thoughts and experiences in the comments below. I always enjoy reading your feedback, as we can all learn from each other's journey. Until next time, keep working on your mindset, keep working on your discipline, and most importantly, keep becoming the trader you are capable of becoming. Best wishes, rise and prosper with Jay Lakhani.